Guys, stop getting distracted. While you're all watching Bitcoin's momentum and celebrating Ethereum's new highs, you're completely overlooking something that's right in front of you. There are projects out there that everyone has basically written off. Coins that should be exploding with this market momentum but are sitting there like they're completely dead. How many of you recognize this card? This was everywhere last cycle when Crypto.com exploded. Cardholders would lock up their native CRO tokens, earn some pretty good rewards, and get to use this card like a credit card. It was an easy way to actually spend your crypto in the real world. I myself enjoyed using this card regularly. The system worked well until they kept slashing their rewards. Over time, the benefits got worse. And if you look at the tokens that people had locked up to get these cards, the price crashed hard and hasn't been able to recover much this cycle. So basically, this card went from being a game changer in the space to pretty much useless for most people. But here's the thing that got me thinking. Can the CRO token actually make a comeback? Is it even possible? Well, remember, we're not talking about some tiny new project here. This is Crypto.com. They've got massive marketing budgets, global partnerships, and millions of users. And CRO isn't alone. There are other projects just like this that actually have huge connections, real-world utility, and serious backing. But they've been completely forgotten and overlooked because of their brutal token price action. The question is whether these projects are actually dead weight or if they're just waiting for their moment to shock everyone. Now, tracking market movements requires the right tools. Let me actually show you how I've been managing positions in projects. When I spot unusual activity and want to get properly positioned for the next move, I have a short list of exchanges to rely on. And BTCC is one of them. The fees are light, the leverage options fit my style, and it's been reliable after 14 years in the game. No KYC hassles either, which makes it easy. If you're curious, I'll leave the link in the description with details on a starter bonus. And for staying on top of opportunities that fly under the radar, the FireHustle Discord has been the best spot for me personally. We've got a community that's been discussing opportunities in the market, whether the charts are looking green or red. Links in the description if you want access to these real-time insights. And as always, none of what I share is financial advice. Do your own research before making any investment decisions. Now hit those like and subscribe buttons and let's figure out if these dead coins are actually about to come back to life. So I mentioned that CRO isn't alone in this situation. There are actually several projects sitting in the same spot. They're projects that have built a strong foundation over the years with real-world utility, serious backing, but completely ignored by the market. I want to walk you through 3 specific examples that caught my attention. CRO, which we already touched on, DEG from the Constellation Network project, and Q&T or quant. These aren't random coins I pulled out of a hat. Each one of these represents a different sector of crypto infrastructure that should theoretically be thriving right now, but instead they're all stuck in the same boring price action. The question is whether this boring price action is telling us to move on to better opportunities or if it's just setting up for a strong comeback this cycle. CRO might be the most frustrating coin on this list because Crypto.com has been everywhere. They bought naming rights to the Lakers arena, sponsored Formula 1, and ran Super Bowl commercials with Matt Damon. You'd think that all this exposure would translate to price performance, right? Well, wrong. The problem with CRO isn't lack of visibility, it's that the team wasn't able to keep up with the market shifts. When the project launched, exchange tokens were the hottest thing in crypto. The Binance coin performed really well alongside the Binance platform becoming a major name in crypto, and every exchange wanted their own version of this story. But the landscape has changed dramatically, and of course, the bear market in 2022 tested every project out there. Many struggled to stay alive. Crypto.com was forced to restructure their rewards programs, reducing staking benefits for its cardholders. And the focus was shifted more towards institutional services and away from retail perks. While this might make sense from a business perspective, it's removed a lot of the incentive to hold CRO tokens. Why stake for reduced rewards when you can put that money into assets actually moving? But here's where it gets interesting. Crypto.com is one of the few exchanges actively expanding globally while others face regulatory pressure. They're launching new products, entering new markets, and building institutional infrastructure. We're also starting to see some efforts to start incentivizing users with challenges and rewards. And we recently learned about Trump Media teaming up with the exchange to build a $6 billion CRO treasury. So the company is growing even if the token isn't reflecting it yet. There was clearly a time when this token was shining, and we may be seeing some signs of life with the recent pushes up, but there's still a long way up to reach the all-time high. The real question is whether CRO's utility will evolve beyond just exchange benefits. If they can integrate the token into their payment systems, DeFi products, and institutional offerings in a meaningful way, there might be a case for a comeback. And of course, if their Visa cards offer a better return for CRO lockups, there's potential for retail adoption too, similar to what we saw last cycle. But CRO is just one example of this type of project. Let's talk about DAG and the Constellation network. This project has been around since 2017, promising to solve the blockchain's biggest problems with something called a directed acyclic graph, or DAG. Traditional blockchains grow by adding blocks of data on the network in a single line. In a DAG-based network, transactions are confirmed through a web-like structure that forms multiple paths through the network's history. The goal here is to increase scalability and reduce network fees to zero. The tech sounds impressive on paper, but they've shown a lot of real-world progress. The Constellation network team formed a partnership with the US Air Force to build them secure data tracking systems. This is a crypto project that was actually able to secure contracts from the US government. But the use cases go beyond this. Large data systems like AI applications can make use of their network for secure storage and tracking. And there's a growing ecosystem building within the network in the form of metagraphs. These are just individual layer 1 projects and blockchains that are created on top of the hypergraph, which is the network's base layer. The team has been consistently shipping updates and expanding their operations. So why is nobody talking about it? Well, the brutal truth is that this project suffers from a narrative problem. While everyone's obsessing over the latest AI product or asset tokenization platform, Constellation is quietly building something that doesn't generate headlines: enterprise-grade infrastructure for large data. Their hypergraph protocol processes data validation for government and military applications. But try explaining that to the average investor. Will they care? Well, here's something I personally find really interesting. They've been shifting their focus more onto decentralized identity and data monetization. Data privacy is slowly becoming a bigger concern, especially as regulations are quickly changing, and there's growing involvement of government bodies in Web3. Constellation Network might be positioning itself for a different kind of adoption curve, which could play out with the privacy narrative. And this could potentially change the course of this price chart. Now, let's shift gears and talk about a more controversial project, the Quant network. This used to be the golden child of crypto infrastructure. Their overledger technology promised to connect any blockchain to any other system, creating the internet of trust that enterprises needed. The Quant token hit over $400 in 2021, and everyone was convinced that Quant would be the backbone of institutional crypto adoption. Fast forward to today, and Quant is trading at about $100 as we speak. The market cap is still large enough to keep this in the top 100 list. But the problem is we're not really hearing much about this project. So what happened? Well, the interoperability narrative got crowded. Chainlink expanded their cross-chain services across the crypto space, to a point where Chainlink is now considered the leader of interoperability. Cosmos is another well-known ecosystem in cross-chain operations. Then projects like Layer 0 emerged as competitors and gained a lot of traction this cycle. It's almost like Quant got left behind in the dust. But should we actually be dismissing this project? Well, while other interoperability projects focused on DeFi and retail applications, Quant doubled down on enterprise and government partnerships. They were chosen by central banks around the world to help develop digital currencies. There are also pilot programs in place with major financial institutions. And earlier this year, the team released QuantFlow, a software program that institutions can use to automate finances, like payrolls and taxes. They call this programmable money. Their approach is less flashy, but potentially more sustainable in the long term. The challenge is that Quant is not the only one targeting enterprise-level adoption, so there may be more updates and integrations required from this team to stand out. So here's the thing about these projects. The market has a short attention span. Everyone's chasing trends and hot sectors that seem rewarding, at least in the short term. Meanwhile, projects like Crypto.com, Constellation Network, and Quant are doing exactly what crypto was supposed to do from the beginning: building real infrastructure, solving actual problems, working to create the backbone of our digital future. And while traders are getting distracted by new opportunities, these dead coins might be positioning themselves for the kind of sustainable growth that actually matters. CRO has the marketing budget and global reach to make a serious comeback, especially now with Trump media's announcement. Constellation Network is building a landscape for privacy in crypto, which I think is going to become a much bigger topic in crypto moving forward. And Quant is creating an opportunity for strong institutional adoption of Web3, whether the market realizes it or not. So the question isn't whether these projects are dead. The question is whether you're willing to bet against the market's short attention span. Because if history has taught us anything, it's that the most overlooked opportunities often become the biggest movers. Of course, this also depends on how well the team can progress while we're figuring out where this market is headed next. What do you guys think? Are these projects actually setting up for a major comeback, or should we just move on to whatever is trending next? Drop your thoughts in the comments below. And if you found this video helpful, then smash that like button and subscribe for more content like this. As always, none of what I share is financial advice. Always do your own research before making any investment decisions. Hope you guys enjoyed the video, and I'll see you in the next one.